I think that's exactly what you'd be looking for. They moved down overnight again after an early rally attempt. Global markets all beginning to feel the weight, particularly in Asia. But markets remain thin and they remain volatile. And quite frankly, doing this 50 years, that's just what you need for a bottoming process to succeed. Choppy up and down, testing and retesting levels. And if the tests hold, then you might have gotten past the volatility and things get better. But the viewers should not jump ahead of themselves. Let the market tell you where it's going by zigzagging back and forth and holding the previous levels.
So if they're asking right now, is the worst over? Are you saying it's too early to tell, or?
I'm saying we're in what looks like the beginning of that process, the bottoming process. And again, you'll see zigzagging. Now, what would erase that? If they rolled over, retested, and failed badly. And that would tell you that you have further to go, maybe even further to go on the downside, but further certainly in the process of bottoming out and getting back to somewhat less volatile markets.
All right, we have the volatility index, which of course is getting all the attention, down 11 points, down to about 25, still elevated, but much more normal levels. So we obviously had that kind of forced buying in the VIX-related options. Has the fever broken there? I mean, what can we take away from there in the way of figuring out if the market is now operating on somewhat more normal supply-demand terms?
Well, Michael, I think it's getting there, and I think you saw some of that in these inverse and reverse setups, the ETNs that they had. Some of them got absolutely blown away in trading the VIX, losing 70% overnight. And I think by some of their prospectuses, they might have to be wound down.
They are going to be, Art. I mean, Credit Suisse came out this morning and calling it an acceleration, essentially, but that's over and done with. I mean, it kind of shows there is some risk. Significant risk in those who are using these ETNs to obviously profit from what they thought would be a very quiet market.
Yeah, absolutely. But that removes one minor pressure from us. I mean, people forget when they look, they saw the sell-off. Everybody's using the word panic. There were many components to this. There was margin selling. There was redemption selling. There was fear of redemption selling. I'm running a fund. I'm worried Michael's going to come in and redeem a lot of the shares outstanding. So I do some selling from the portfolio to be ready. And the ETFs themselves, not so much just the ETNs, they're easy to sell. But when the backers have to sell the underlying stocks, they're not so easy. And that results in what looks like occasional mindless selling. When you see there's a vacuum, you see there's no bid, and yet they keep selling into it because they feel they have to liquidate to stay on top of it.
Overnight yesterday, we saw the 10-year yield get very close to 3%. A lot of people thought that might have been one of the causes of what we've seen over the last couple of days, which then leads to all of the things you just talked about. The future of the market from here, very reliant on what's going to happen with those long-term interest rates? Should we be watching that?
Yeah, I think people are looking at the 10-year and they're wondering what happened here was when we got some very good news on wages in Friday's unemployment report, and that spooked a lot of people. They said, gee, that could perk up inflation, and even though the Fed's been hoping to perk it up a little bit, could it have gotten out of their reach? Will they find that they are behind the curve? Will they have to move more rapidly? And that is what sparked this multi-day volatile sell-off that we had.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.